Welcome back to our lesson in microeconomics. For today, we will be talking about costs of production and market efficiency. For the first part, we will be talking about the cost of production. So first, let's talk about production. So production is the transformation of factors of production into goods and services. And what are these factors of production? So we already know that the factors of production includes our land, labor, capital, and entrepreneurship. So when combined, these will enable us to make our goods and services. So the one responsible in the production of goods and services is the firm. So a firm is an economic institution that transforms factors of production into goods and services. So it organizes the factors of production and or produces goods and or sells goods to individuals, businesses, or government. So in the production of goods and services, of course, we will get something or we will obtain something in return of our production. So we um, make goods and services in order to sell them and make a profit. So therefore, in selling our goods and services, we will get or we will earn a certain revenue, but of course, it will entail some costs and expenses. So to get a profit, we have to determine the total revenue of our sales. So that's coming from the sales of our goods or sale of our services, and we deduct it by our cost. So total revenue here is the amount of a firm receives for the sale of its output. So mao ni siya ang ato ang gitawag nga nahalin. And then our total cost is the market value of the inputs a firm uses in production. So mao ni atong mga gasto. So whether it would be related to the actual product itself nga atong gibaligya, for example, we're selling pencil and pagpalit nato sa pencil, of course, naa may gasto para makapalit og usa ka unit or several units of pencil. So that is our costs. Aside from that, in order to sell the pencil, we may incur other expenses related to selling. For example, if nangabang tawag pwesto para makabaligya sa ato ang pencil, so that would be an expense. So naatay additional nga gasto or naatay bayad sa magbantay sa ato ang stall, sa ato ang lugar or sa atong tindahan. So that's also additional nato nga expense. And then, how do accountants compute profits? So, in your accounting class, you have learned that to get the profit or to compute the profit, so we must deduct the expenses and the costs from our revenue. But what is being used in accounting is the explicit revenue and the explicit costs. So what are explicit revenues and what are explicit costs? So explicit revenue is the revenue earned by a business or an individual which can be easily identified or stated. So, pag moingon tag explicit, klaro, gi-emphasize gyud na siya, gi-state gyud na siya. So meaning this should be what we really earned in reality. Unsa man gyud actual gyud nato nga nadawat nga halin or ang actual nato nga nahalin. Okay? When we say explicit costs, it involves the actual payments. So, katong actual na po nato nga nagasto. For example, we have the wages and salaries, materials, and rent. So, mao ni siya tong mga tinuod gyud nga ato ang nagasto in order to generate our sales. Why do we need to emphasize what is the actual or unsa man gyud stated unsa man gyud klaro nato nga nagasto? Because there are also revenues and costs that are not explicit. They are not actual. And that is what we call as implicit. So that is what is being considered by economists. So how do accountants compute profits? So, sorry, 3, 2, 1. So how do accountants compute profits? So we have here a problem to illustrate the accounting accountant's view or accountant's way to compute the profits. So if a firm sells 1,000 pairs of earrings at a 5 pesos each, its total revenue is 5,000 pesos. So 1,000 times 5 pesos. For an accountant, total costs are the wages paid to labor, rent paid to owners of capital, interest paid to lenders, and actual payments to other factors of production. If the firm paid 2,002 employees to make the earrings, that's our labor, 1,000 for the materials, rent, and interest, the total cost would be 3,000 pesos. Okay, so again, our formula to compute the accounting profit, that's explicit revenue minus explicit costs. So again, our revenue is 5,000 pesos. And then we have wages to employees, materials, rent, and interests are our explicit expenses. So our total cost here, or explicit cost, so our total cost here is 3,000 pesos. So we deduct this total cost from our revenue. So we will get a profit of 2,000 pesos. So these are our actual revenue and our actual costs and expenses. On the other hand, economists compute profits on a different way. So for economists, economic profit is equivalent to the explicit and implicit revenue minus the explicit and implicit costs. So as you can observe in our formula, there is an added item on the revenue and the costs part. So we have here, aside from the explicit, we have the implicit. So implicit revenue are the revenues that you don't receive but that increase your net wealth. It's like wala nimo siya actually na earn pero mauunta ang increase sa value sa imuhang wealth. Then when we say implicit cost, that's an opportunity cost that is equal to what that has to be given up by a firm for using factors that it neither hires nor purchases. So in short, this is our opportunity foregone. That when we choose a certain alternative, we need to give up the benefits of the foregone nga uh, benefits foregone on the alternative nga wala na to pilias. For example, so I have mentioned this before in our previous class nga, for example, when you choose to go to school or continue your education, you're foregoing the salary, for example, that you would have received if nag-work na ka karon. So, ang opportunity for gun is ang salary nga imong ma-receive. So, the salary nga ma-receive unta nimo kung nagtrabaho pa ka, mao to siya ay opportunity cost. Okay? So to illustrate, you have say that the owner of our earring firm could have earned 1,500 working elsewhere if she did not own the earring firm. So kung wala unta siya wala siya nagtukod og earring nga firm, so maka-earn unta siya og 1,500 kung nagtrabaho pa siya sa lain. So our explicit cost here is going back to our original given sa atong illustration on the computation of the accounting profit. So, di ba, naaman to wages to employees, and then we have materials, rent, and interest, which is total of 3,000 pesos as your explicit cost. And now we have an added cost, which is implicit cost of 1,500. And this is the opportunity for gone because uh, the owner choose to uh, own an earring firm instead of working elsewhere. So, ang opportunity for niya is katong ma-earn unta niya kung wala siya nagtukod og earring nga firm. So now the total cost is 4,500. Say that the earring firm owns a kiosk whose market value rises from 10,000 to 11,000. The economic concept of revenue would include the 1,000 increase in the value of the kiosk as part of the total revenue. So if you can recall earlier, we mentioned that ang halin or ang ilahang revenue from the earring firm is 5,000 pesos. And then we have here the added revenue, which is our implicit revenue katong pag saka sa value sa iyang property from 10,000 to 11,000. So na increase in the value nga 1,000. So our total revenues now is 6,000 pesos. So kung kompyuto nato ang iyahang accounting, ang economic profit, so katong 6,000 karon o katong i-compute ganiha nga 4,500 nga expenses. So ang atong mahimong net economic profit would be 1,500. Then we proceed to the types of costs. So we already mentioned that there are explicit costs and implicit costs. So there are several types of costs. So we will discuss here some of the most common terms in relation to cost. So we have the variable cost. So this change according to the quantity of the goods produced. So kung daghan taog na produce nga goods, most likely taas sa dato ang variable cost. For example, nag gama ta og mga salina. So, for example, ang usa ka salina makagamit siya og 1 meter nga tela. So, kung makagama tag 10 ka salina, so 10 times 1 meter, so makagamit ta og 10 pud ka meters nga tela. But if ang na-produce nato is only 5 salina, so 5 ka meters ra sad atong magamit nga tela. So, mo na siya variable because it varies. So, maglain-lain ang iyahang cost or ang total cost niya depende kung pilay ato ang nagama. And this applies to labor and raw materials. So, kung sa labor, di ba kung kung nataas, kung daghan og nagama, for example, if the uh, wage of your employee is sa piece work niya, so every piece ang iyahang wage. So for example, kung 1,000 pieces ang iyahang nagama, mas dako siya og madawat kumpara sa 100 ra ka buok iyahang nagama nga output. So man na siya nga variable ang iyahang labor or ang iyahang pasweldo. Then when we also have the fixed cost. So opposite siya sa variable cost because ang fixed cost remains the same regardless of the quantity of goods being produced. So kung madaghan or magamay ang nagama sa company, ang fixed cost remains fixed. So mao ra gihapon siya. Example, you have monthly rental. So, for example, nag-abang mo og building wherein ana mo nag-produce sa inyong goods. So, nag-abang mo ana for ang inyong kontrata is 1 year nga tag 10,000 a month. So, panangitan gamay ra mong na-produce sa karong bulan na wala man lang nagpasabot nga mo gamay ang inyong monthly rental nga 10,000. Your rental will still be 10,000 even if zero pa ang inyong magama or nanirado mo or temporarily nag-shutdown mo. But since ang kontrata ninyo is 1 year, so you're going to pay for the rent even if wala mo'y output. Then you have economic costs. So this is the sum of your variable and fixed cost plus the opportunity cost. So therefore, this is your total of the explicit and the implicit cost. So the economic cost of a decision that a firm makes depends on the cost of the alternative chosen and the benefit that the best alternative would have provided if chosen, and that's our opportunity cost. So again, the sum of the explicit and the implicit cost is our economic costs. We also have the long run costs. So these are the costs that we accumulate when firms change production levels over time in response to expected economic profits or losses. So the land, labor, capital goods, and entrepreneurship all vary to reach the long run cost of producing a good or service. So this long run is a certain period of time, but not necessarily you limit it to a certain number of years kay lahi-lahi man ang firm sa ilahang definition for the long run nga period. So dili gyud siya nga ah, constant or uniform ni siya nga unsa kadugaya ang long run, unsa kadugaya ang short run, because it depends on the company. So the long run is a planning and implementation stage for producers. So different firms may have different stage of matawag nila nga long run. Pwede ang long run sa usa ka company is um, mas dugay or mas taas pa kumpara sa long run sa other nga company. Pag moingon sa taog, short run, so these are costs that are accumulated in real time throughout the production process. So fixed costs here have no impact of short run costs. Only variable costs and revenues affect the short run production. So pag moingon taog, short run, mas dali ta maka-adjust sorry, mas lisod tang mo adjust kay mubo raman ang panahon. Dili pa nga naka-flexible ang ato ang adjustment with response to our costs and expenses and in our production. We also have the term marginal cost. That's the change in the total cost when another unit is produced. So, kung mag-add on ka og another unit nga gamon, so, katong gasto para sa additional unit nga gigama, mao tay gitawag nga marginal cost or additional nga cost. Then we have average cost. That's the total cost divided by the number of the goods produced. So here we have here an example of a cost curve. So you have here your marginal revenue, and then we have here your marginal cost, and we have here your average total cost. So when the average cost declines, pag mo anam siya kagamay, the marginal cost is less than the average cost. So, pag mugamay siya, pag mugamay ang ato ang average cost, pag mo lower down siya, so ang ato ang additional nga cost mo anam mo mas mugamay siya kaysa sa ato ang average cost. And the opposite, kung musakang ato ang average cost, the marginal cost is greater than the average cost. Okay? So, pag musaka, tanawa diri, kani ang graph, di ba? So, this is your ATC and this is your marginal cost. So, ATC, this is your average total cost. So, pag ang average cost daw mo gamay, tanawa, pag muubos siya, di ba, ani nga point ang pinakaubos, ang marginal cost is lesser than the average cost. And look at here in the marginal cost, di ba, mas gamay siya, mas mubo siya, kaysa sa ato ang um, mas mubo siya kaysa sa ato ang average total cost. Then we have pag opposite po siya, pag musakang atong ATC, 'di ba? Pag musakang ATC nato mo, mas labaw ang ato ang marginal cost. When the average cost stays the same, it's at the minimum or maximum, the marginal cost equals the average cost. So, pag ano po sila, naa siya sa same nga point, kani siya, so marginal cost kay parehas sa atong ATC. So, nag-meet sila ani nga intersection. Then we have again the terms long run and the short run, which is mentioned earlier. So the production process is generally divided into a long-run planning production, wherein a firm chooses the least expensive method of producing from among all possible methods, and we also have the short run adjustment decision, which in which a firm adjusts its long run planning decision to reflect new information. So when we say long run and short run, they do not necessarily refer to specific periods of time independent of the nature of the production process. So again, sa akong gi-mention ganiha, wala tay matawag nga uniform nga matawag nato nga mao ni ang short run period ug mao gini siya ang long run period kay depende na siya sa kumpanya, depende siya sa production. So they refer to the degree of flexibility the firm has in changing its input. So you will know kung short run sa iyaha or long run sa ilaha, depende kung kaya ba nilang mag-adapt or mo-adjust sa ilahang changing inputs. So in the long run, by definition, the firm can vary the inputs as much as it wants. So mas naa sila flexibility, dili sila maglisod og adjust, dili sila maglisod og adapt. So, meaning, ang short run is maglisod sila og adjust sa ilang inputs, maglisod sila og basta-basta na lang mag-change sa ilahang decisions with regards to their factors of production kay mubura ang time to make any changes. So, dili pwedeng basta-basta na lang mag-vary na lang ta sa ato ang inputs kay mawura man ang time. Di parehas sa long run nga mas flexible na ta. So in the long run, a firm chooses among all possible production techniques. This means that it can choose the size of the plant it wants, the type of machine it wants, and the location it wants. Of course, pag long run na lang siya, mas naturally mas dugay-dugay na gyud ang ato ang operations. So mas kaya na natong maka-invest in fixed assets. So makapili na gyud ta unsa may ganahan nato para ma-boost ang ato ang production. The firm can vary the inputs as much as it wants, and then all inputs are considered variable. Kay magdepende naman siya sa ato ang production. In the short run, the firm has fewer options. So, akong gi-mention nga maglisod ta og adjust, maglisod ta og vary sa ato ang inputs, maglisod ta nga basta-basta na lang mag-change sa ato ang planning in terms of our production. It is where the firm is constrained in regard to what production decisions it can make. So, some of the flexibility that existed in the long run no longer exists here in the short run. Some inputs are so costly to adjust that they are treated as fixed. And okay, so some inputs are considered as fixed. So for the costs of production, fixed costs are costs that are spent and cannot, okay? So here are our costs of production. So we have fixed costs. So these are costs that are spent and cannot be changed in the period of time under consideration. As you can recall, diba, pag fixed siya, it remains the same regardless of your production. There are no fixed costs in the long run since all inputs are variable and hence their costs are variable because we are now more flexible in terms of our input, so it tends to become variable. So in the short run, however, a number of costs will be fixed. So what are the considerations in terms of the long run and short run as we relate that to our costs of production? So we have to remember that fixed costs are those which cannot be changed because they remain the same regardless of our production. So fixed costs are costs that are spent and cannot be changed in the period of time under consideration. And there are no fixed costs in the long run, as mentioned earlier, because all inputs are tend to be variables since we can adjust them easily. Naatay mas natay freedom to choose what inputs we're going to use. In the short run, it will be difficult to adjust or be flexible. However, a number of costs will now be treated as fixed. So we have here an example of a table showing how to determine our total cost, how to compute our marginal cost, average fixed cost, average variable cost, and our average total cost. So to get the total cost, we simply add the fixed cost and the variable costs. And then for the marginal cost, we will get the difference between the preceding output and the next nga output. So for this example, ang yang gikuha kagkatong na siya yung mga certain gaps na nga gikuha. So for example, from 3 to 4, 9 to 10, 16, 17, 22, 23, 27, 28. So, giskip niya tong 5, 6, 7, 8. Dire po, giskip niya ang 11, 12, 13, 14, 15. So, ang iyahang gap is ani iyahang gikuha. Pero pag tagaan ganito og sequence nga ano gyud siya sunod-sunod like 3, 4, 5, 6, 7, 8, 9, 10. So, ang pagkuha nato sa marginal cost is katong nag-una sorry, kaning nagsunod, i-minus nimo aning nag-una. Okay, so difference man ni siya. This is the change in the total cost. For example, 100 minus 88, so that's 12. Ang sunod na pod is 150 minus 100. Nga na. So, mato siya change in total cost kung sunod-sunod pa ni siya. Kung 3, 4, 5, 6, 7, 8, 9, 10. So, for this example, so, skip man niya. So, ang gapon nga gi-compute kay kanila pong duha-duha kani siya. So, kani 88 ug 100. Sorry. 88 and 100, kaning 150 ug 158, 200 and 207, 250 and 260, 305 and 320. So how do we compute our marginal cost? Remember, marginal cost is our additional cost for every 1 unit that we add or gidugang. Mao na siya nga kani nga gap ang i-compute kay 1 unit man ang gi-add. So 100 minus 88, that's 12 divided by the change in output. So, our change in output sa first nga column, sa column 1, di ba na ay 4 and 3. So, 4 minus 3, that's 1. So, 12 over 1 is 12. Then, next we have 158 minus 150, so that's 8 divided by 10 minus 9, that's 1, so that's 8. And then so on. Again, mao ni siyang gap 188, 158 ug 150 kay na may giskip nga mga number of outputs. And kung sunod pa ni siya 3, 4, 5, 6, 7 so dapat 100 minus 88 nya 150 minus 100, 158 minus 150 and so on. So ana siya. Next, we have average fixed cost. So that's computed as fixed cost over your outputs. For example, here, our fixed cost is 50 divided by 3. That's 16.67. So where do we get 50 and 3? 50 is from the second column and 3 is from the first column. Next, for the 12.50, so that's 50 from the second column divided by the output nga 4. So you have 1250 and so on. You compute that way. And as you can observe from 16.67 for 3 outputs, nahimo na siyang 1.56 in the 32nd output. So kung 32 ka items ang gigama, nigamay ang fixed cost niya. Mangutana mo, ma'am, ingon ka parehas ra ang fixed cost bisan pa og ma-change ang output, ang gigama. Nga naman lagi nga nausab man ni siya. Diba? Remember, ang katong gingon nga parehas ra ang fixed cost aning total. Pero pag kaning total i-divide nimo sa number of units nga nagama, mugamay gyud ang per piece. So therefore, based on this computation, we can say nga advantageous para sa firm kung daghan siya og gigama. Kaya nga naman, mas spread man atong fixed cost that will make the individual costing of the item much cheaper in terms of its fixed cost. Pero kung ang atong gigama is gamay ra, like for example 3 units lang, di ba ang per unit nato nga cost for the fixed cost is 16.67. So therefore kung mag-pricing ta, dapat mas labaw pa sa 16.67 ang ato ang pricing. Wala pa labot diri ang variable cost. 'Di ba? So let's take for example kaning sa column 7, 'di ba? Ang iyahang average variable cost, which is variable cost over output, is 12.66. So dapat dili kung i-add nato silang 12.66 ug 16.67, that's 29.33. Dapat ang pricing nato is labaw sa 29.33 para naatay ginansya. And unsa may naka-push ana niya ngano man atong pasakaan dapat mula pa siya 29.33 kaya ang individual cost man gud niya is mahal. Compared here in the unit 32, tanawa 1.56 ang average fixed cost, ang column 7 niya is 12.50, ang total average cost is 14.06 sa kada isa. So, kinahanglan ba kang mag-costing ana nga labaw pa sa 29 like in the first nato nga item, diba 29.33? Dili ka kinahanglan mo price og labaw pa sa 29.33 kay barato ra man ang atuang per unit nga cost. So, kaya natong maka-adjust sa atong pricing kung ato ang costing is barato. Pero kung mahal na daan na atong costing, maglisod ta og hatag og discounts, maglisod ta og hatag og bargain, di ba? Makig-bargain sa ato ang maglisod ta makig-bargain sa atong customer or magtawaran kay malkansi man ta kung ato apong i-lower kaayo ang ato ang i-allow nga selling price. Okay? So that's how you will compute the items there. And then if you're going to plot those points there, like for example, the fixed cost, it's steady here, 50 man tanan, so straight line lang siya. Then the variable cost, it's going up. Okay? And then we have the total cost, it's also going up. So this is how your cost curves will look like. So if you can see here is our total cost is really going up. Going back, you have here from 88 na himo siyang 450. So it's natural mo saka siya kay nag-ana man pud kasaka ang iyahang total variable cost. But if you're going to look at the marginal costs, so from 12 na himong 8, 7, 10, 15, di ba? Niubos siya niya pagkahuman ni saka. Okay? So, nga na gyud ang nature sa iyahang marginal cost for this given nga data. Okay? So, U-shape siya. Tanaw na to ang ato ang average fixed cost paubos. And average variable cost is taas. Nya ni alam siya kagamay, unya ni alam na siya kasaka. U-shape pod ang forma sa iyahang graph ani. And for our average total cost, taas ni mubu, ubos niya, ni isa ka na po siya balik. So, tanaw na to itong combined na nga mga graphs. So, here you have the legend. So, for marginal cost, here we have blue. Then, you have this, siya orange. You have average fixed cost. So, alam siya kagamay. And then, average variable cost, yung taas siya, ubos niya yung saka. And then, you have ATC. So, you have pagayu nga shape. So, these are your per unit nga cost curves. Okay, now let's go to market efficiency. So, with regards to market efficiency, we have two terms here. We have the technical efficiency and we have the economic efficiency. So, when we say technical efficiency, this means that the production process uses as few inputs as possible to produce a given level of output. So, diba, from the term nga efficient, diba, dapat mas daghantag magama kung, for a given limited resource. So, for example, nara kay usa ka oras para magtuon unya nakatuon ka og tulo ka subject, and then i-compare nimo adtong last time nga nagtuon ka for 1 hour unya ang natun-anan nimo kay isa ka subject. So para nimo mas efficient ka karon kay nakahuman man ka og tuon sa tulo ka subject, or gisugo ka nga manlaba. So susud sa usa ka oras ang nalabhan nimo karon kay 5 ka sanina. Unya the last time gipalaba ka pagkahuman sa usa ka oras ang nalabhan nimo kay 15 ka sanina. So asa may mas efficient adto? So katong mas daghan ka og nagama, katong mas daghan ka og nalabhan. So when there are multiple inputs, many different production processes can be technically efficient. For example, say that to produce 100 bushels of wheat, one production process uses 10 workers and 1 acre. So may kinahanglan ni mga resource ang tanom or mag atiman sa imong wheat, and then you have 1 acre of land. Another production process uses only 1 worker and uses a resource consisting of 100 acres. So mas daghan ang yuta nga kinahanglan. Say also that these are the lowest number of inputs you can use with those production processes. So mao na ba daw to ang pinaka minimum niya nga inputs nga magamit. So which of these two production techniques is more efficient? So both are technically efficient since neither involves less of both inputs. Mao man ang pinaka-efficient niya nga combination nga kung mogamit ka og 10 workers or mag-hire kag 10 workers kinahanglan mo 1 acre, but if gusto ka makatipid sa worker isa lang pero kinahanglan kang makagamit og 100 acres of your land. Meanwhile, for the term nga economically efficient or economic efficiency, so we can say that the economically efficient method of production is the method that produces a given level of output at the lowest possible cost. So if previously we're counting on the uh, number of inputs or the item in terms of our inputs, here in economically efficient nga production, we're looking at the cost. So, pilay magasto. So, this time, kinahanglan na ay peso value ang atong inputs. So, with a land at 5, sorry, that's dollar na siya. $100 din na siya peso niya na dollar. $100 an acre, you will use the production process that uses lots of workers and less land. So, kung mahal ang bayad sa land, so of course, i-minimize nimo ang resource nga land, anya mas daghan nun nimo ang workers. But if the land is at $10 an acre, you will use the production process that uses fewer workers but more land. Kay mas makabarato man ka kung mas daghan ang land kumpara sa workers. Thus, all economically efficient production processes are technically efficient, but not all technically efficient production processes are economically efficient. So, based on this, you have here the conclusion nga, kung economically efficient na siya, lower ang cost, it follows nga technically efficient na siya. But dili daw tanan nga matawag nimong technically efficient nga production is automatically economically efficient. Kaya pwede siyang gamayon og inputs nga needed pero mahal ang costing, di ba? Although gamay rang inputs nga kailangan pero mahal. For example, kinahanglan ni ang imong inputs lang kay 100 acres 100 acres siya compared adtong production nga na ay 1 acre. So, para sa imuha, mas okay tong 1 acre ra ang kinahanglan kumpara sa 100 acre. Pero what if katong 1 acre kay mahal ang per unit or per acre kumpara adtong sa pikas nga 100 acres pero barato ra kayo ang per acre. So, dili automatic nga kung mas gamay gani ka ang imong inputs in terms of units is automatically mas makabarato na ka. Kay puwedeng man mahal ang peso value adto nga inputs. But if that is an economically efficient production process. Barato siya, makaingon ta nga technically efficient siya. Now let's proceed to economies of scale. So we can say that the production exhibits economies of scale when long run average total cost decrease as output increases. So this means nga pag mudaghan na ang ato ang output, unya mo barato or mas cheaper ang atong total cost, matawag na siya economies of scale. So naturally pag daghan ta gigama or daghang tag-output, mas makabarato gid ta kay mas spread out man ato ang cost whereas atong magama lang ta og ginagmay. Para siguro lang mag-produce og ganang pagkaon, di ba mas makaginansya kapag daghan imuhang order nga i-accept ay kanamang dinaghan ang order. For example, nagama og puto, mas makabarato kasi imong cost kung daghan ang puto nga gamon kumpara sa katong ginagmay lang ang imuhang gamon. So we have here the example. So if producing 40,000 high definition TV costs a firm $60 million, but producing 200,000 TVs costs the firm $40 million. So between 40,000 and 200,000 units, production exhibits significant economies of scale. So pag abot sa 200,000, although 40 million in total, ang iyahamang pong individual nga costing is mas barato. So, mas makaingon ta ni nga na ay economies of scale. So, one can also say that there are increasing returns to scale. So, in real-world production processes at low levels of production, economies of scale are extremely important because many production techniques require a certain minimum level of output to be useful. Then, on the other hand, naapod tayo opposite sa economies of scale na gitawag nga diseconomies of scale. So, if it is diseconomies of scale, our long-run average total cost increase as output increases. So, ang nahitabo noon ani, mas muda ko atong gasto pag musakang ato ang output. So, for example, if producing 200,000 high-definition TV costs the firm $40 million and producing 400,000 high-definition TV costs the firm $100 million, there are diseconomies of scale associated with choosing to produce 400,000 rather than 200,000. So, this economy siya kay nisaka ang ihang total cost na mo siyang $100 million pero ang iyaha pong nahitabo sa iyang per unit is na nisaka siya from $200 to 250 each. So, imbis unta nga daghan na itong giproduce, dapat mas makabarato ta sa per unit, mas ni mahal noon siya. One can also say that there are decreasing returns to scale. Of course, pag ibaligyan nimong individual TVs, mas dako kang maginansya adtong $200 kumpara sa katong $250. So these economies of scale usually but not always start occurring as firms get large. It is important to remember that diminishing marginal productivity is not the cost of these economies of scale because there are also other factors that affects this situation. Makaingon nga nung naamay these economies of scale. So we have here some processes or some potential nga mga factors affecting these economies of scale. So we have here the social dimensions. This involve how we relate to our other workers or how the firm uh, is able to interact with its workers. So we have here first is as the size of the firm increases, monitoring costs generally increase. And the second one, as the size of the firm increases, team spirit or morale generally decreases. So what are these monitoring costs? These are incurred by the organizer of production in seeing to it that the employees do what they're supposed to do. So, mao ni gasto pang-monitor or pag-supervise sa imuhang mga employees. Unlike if usa ra imuhang empleyado nya, ikaw pod ang nagbantay sa imuhang store ba na siya. So, dili na ka kinahanglan mang-hire pa og person para bantayan tong imong worker because naaman ka pwedeng magbantay or sole proprietorship mo imong business. Ikaw ra pud ang nagbantay, ikaw tag-iya, ikaw tanan. So, wala kay gasto for monitoring. Pero pag mas daghan noon, mas daghan na ka og gamunon nga products, manginahanglan makag more workers. And if there are more workers, you need somebody to look after them para look after them to monitor them para tadahon kung nibuhat ba sila silang trabaho. That's why mo increase ang atong monitoring cost. And this will contribute to the diseconomies of scale because we're adding to the costs of production. Another social dimension is the loss of team spirit or the feelings of friendship and being part of a team that brings out people's best efforts. Kay, it is said nga, ang kaning team spirit is one of the important things that will motivate our employees. But if daghan na daw ang ato ang mga workers, pwede daw mo anam uga wa ang ato ang team spirit. So the production now will slow down and this will affect our output. So pag mo hinay ang ato ang processes, so or naay mga bottlenecks sa atong processes because of the low morale, so gamay sa dato ang output or mamaot po datong output. So the larger the firm is, the more difficult it is to maintain team spirit. Aside from that, we also have this checks and balances, which are needed to ensure that all the various components of production are coordinated. So checks and balances usually ensure that no one person or department has absolute control over decisions, clearly define the assigned duties, and force cooperation in completing tasks. So the larger the organization, there are more checks and balances, and the more the paperwork. So, mas dako og gaston. Okay? So, that's the last part of our lesson. So, thank you for watching this video lesson. So, see you in our next video.
If you like this video, please don't forget to click subscribe and hit the notification bell to be updated with the latest video lessons. Thank you for watching.